So, this is part three of our series on how you can legally pay less taxes in South Africa. And we're jumping in that conversation with Kantha. If you missed our first two videos, please go and check that out and give you more insight as to where we are in the conversation. So, let's get started with Kantha.
From a medical perspective, we get something in this country called a medical tax credit. And that medical tax credit helps you save. It's not a lot, but it helps you save towards, obviously, you're paying towards the medical aid, which gives you the medical benefit. But the medical tax credit allows you a deduction in terms of the member and the dependents, etc. I think it's 319 Rand for the initial member that we've just finished now for the main member. 332 going forward, 638 for the main member and the first dependent, and then for each additional dependent after that is 215. So if you go have a look at, and I'm going to read out this example so we can get it correct. It says, an individual who is 65 years and older, if that person, his or her spouse, is a person with a disability, there'll be 33 and a third of the qualifying medical expenses paid and borne by the individual, and an amount by the medical scheme contributions paid by the individual exceed 3 times the medical scheme fee tax credits for the year of assessment can be claimed. We've got to go and have a look at a few things under medical. Obviously, the medical aid gives you a deduction because you're getting it gives you some sort of leeway because you're getting the medical tax credits. But in addition to the normal tax credits, you've got to ask yourself from a medical perspective whether the person qualifies for any disability or any of the family unit qualifies for any disability. And you'll be surprised at how wide the definition of disability is. Yes, there are a few forms to be filled out, and you've got to do this legitimately. Obviously, go to a medical practitioner and get the rubber stamp of approval, etc. So make sure that those forms are filled out correctly. If you've got somebody that falls in your family unit that falls into that disability in the Tax Act, and make sure that those forms are filled out correctly and that it's reviewed as regularly as it should be reviewed, because there are certain requirements that need to be met there. So joining a medical aid scheme and then ensuring that you claim if you fall within the disability side of the medical definition is also another way in which you can look at reducing your taxes legitimately.
So, medical aid tax credits are really sweet, and if you have a bigger family and there's quite a few of you on that medical aid, your rebate can be quite sizable. So take advantage of that. And one of the things that I recommend is all of your out-of-pocket expenses, scan it and send it to your medical aid provider. So they will collect it, and they obviously communicating with SARS, and that certificate is sent to SARS. So everything is all in one place, and you don't have to go physically sending up medical receipts over to SARS. It's all in one certificate from your medical aid provider. Also know that with the new NHI, okay, NHI is National Health Insurance in South Africa, these medical credits are going to be taken away. So we will not be enjoying them as soon as this program gets off the ground from the Department of Health. However, this program has to be funded from somewhere. So medical credits is one. And the next thing that they're going to do is slap on a tax on your income. They don't know how much this program is going to cost. There has been some talk about how much the tax is going to be, but keep on watching the news. Obviously, when it happens, I'm going to tell you about it for sure, because I'm not very happy about it and paying all of that unnecessary tax. Okay, but know that this is coming in the near future for South Africa.
So we hear these terms being thrown around when we have employees, a new person comes on board, and either the client will consult with me or the employee will consult and say, oh, but I want a travel allowance or a car allowance because I want to save tax. So that regime in terms of travel allowances and car allowances have changed somewhat over the years. And the understanding of the people granting the travel allowance and the car allowance sometimes is not as comprehensive as it should be. Because sometimes the person receiving it has no need for that allowance because they're sitting in an office. They don't leave their offices often. In COVID times, you're not sitting in an office, you're sitting at home. So you're hardly even using that allowance to the full extent that it should be. So we advocate against it if it's a valid, if it's a job that requires a lot of traveling. Then a travel allowance or a car allowance is allowed. And I can't use those two terms interchangeably. I've got to explain to you the difference between a travel allowance and a car allowance. So a travel allowance means that you receive a sum of money that you apply to travel. So you take 5,000 Rand of your salary, you're earning 20,000 Rand, 5,000 Rand of that is towards travel allowance, and that full 5,000 is not taxed at your normal tax rate. So it's taxed, 80% of it may not be taxed at the normal tax rate, perhaps only 20%. And that gets decided by how often you travel, where you travel, business travel versus private travel, etc., using perhaps your own car. Then there's this concept of car allowance, and car allowance is where you're given a sum of, you're given a vehicle, and then based on the value of that vehicle, you are taxed on personal private use of that vehicle. Now, just by definition and listening to those two definitions, if you're a person who doesn't do a lot of traveling, it doesn't make sense to have a travel allowance or a car allowance. It's a great tool to use, but if you're not actually doing the kilometers, and you're going to have to report those kilometers in a logbook, and you've got to put on your odometer readings at the end of the year when you do your tax return, don't do travel allowances or car allowances, because the reality is you're going to be out of ethics in terms of showing the number of kilometers you've traveled, what your odometer readings are, because you're updating those readings now, I believe, when you actually, I know in KZN, I haven't done my number plate re-registration here in Gauteng, but I believe in KZN, you've got to give your opening mileage and your closing mileage, etc. So that information is being put into the NATA system. And so if you're thinking of crooking the system in terms of what your total kilometers are, it ain't going to work. So my advice is, if you don't travel, don't do a travel allowance or car allowance. Yes, if you travel, it can give you benefits, provided you keep a logbook and you record very, very religiously your actual business kilometers. So you keep a record, a diary of when you leave home to office to client A, B, C, D, and you do that daily, and you do that in detail. And that example of that logbook can be found on the SARS website. And in fact, I must stand still here for a little while, because the SARS website is a plethora of information. In fact, all the things that I'm saying to you now can be found on the internet. But if you're needing to go and apply it very, very cleverly, or understand the small writing, the fine print around all of it, please go and consult a professional, because you don't want to go and just be applying these things willy-nilly yourself, or asking your payroll to go change things without you having an understanding of the repercussions or how you're needing to report it. So certainly travel allowances and company cars can give you a break in terms of your monthly costs, etc., or at the end of the period claiming back in terms of what you've traveled and used for business purposes. But if you're not traveling and you're not doing the kilometers, please don't go down that road, because when SARS comes back, they can claw back 5 years into your return, and you then get slapped with interest penalties and everything else. So my suggestion is, if you save money from a tax perspective, make sure you're doing the kilometers.
So the vehicle allowance and things like that, it can get a bit sticky. The maths in it is a little bit complex as well. I highly encourage you to get advice on this, because of that maths. And once you know your kilometers, how much you're using, that 80%, 20%, that's when your tax practitioner can give the most accurate information to SARS. Remember, we want to pay less taxes, yes, but we got to be honest and moral about how we do it as well. We want to live in the civilized part of South Africa, and paying our taxes is a must. But we got to be smart enough to use all of this legal deductions and exemptions wherever we can to keep more of our hard-earned money. So this is the end of part 3. We got the final part coming up soon, so catch me on that video. Also, check out the complete series here.